Alright guys, GenZ Reishirou here, and today we got an update video on our Robinhood portfolio. It's been a while. I guess I've been busy because I've been increasing my knowledge on real estate, watching a lot of videos, especially podcasts at work, because ultimately real estate will be our next venture, so I gotta research into it as much as possible. On top of that, I've been working really hard because the harder I work, the more money I make, just because I don't work hourly, but I'm a flat rate worker. So I don't know when, but this channel will, start producing more content as I eventually get into real estate, because at that point, there's just going to be a lot of content on what I do in real estate. If you guys are new to the channel, then I'm Gen Z Reishirou, and our goal is to just basically document my financial journey. And ideally, you guys can watch me go from a 9 to 5 to becoming an investor and then to eventually retiring early. If you guys are interested in my journey or know any young adults and kids that are interested or want to get onto the right track in finances, then I suggest you guys spread the word about my channel and tell them to follow. Alright, I want you guys to look at my old Robinhood portfolio. This was probably from a month or two ago. It was at $5,000, $2,600 in buying power. Now look at this. JEP $10 per week. JEPQ 15, Realty Income 25, SCHD $20. So these were our weekly allocations. As you guys can see, recurring investment. We can go to our page right here, our updated one, and we're currently at $6,500 of value, $3,500 in buying power. Now remember guys, our portfolio, we invest automatically $200 per week into the account, but only our recurring investments, those are what actually gets bought weekly into stocks. Pretty much I'm a skeptic, so about half of my money stays in buying power in case the market crashes, and if it crashes, I'll have buying power. And if the price crashes, I pretty much consider that a discount on the stock. Alright, we're sitting at 15 shares of Realty Income, 7 shares of SCHD, 1 share of VOO, JEPQ 8 shares, and JEPB 5 shares. Now, the most important thing is currently, well, we changed up our recurring investments. Currently, we're now buying into VOO now. Previously, I bought 1 share at the start of the account and I haven't touched it since. And now we are finally buying weekly into it. So weekly, we got VOO at $50 as our biggest recurring investment. Our second biggest is SCHD. We got JEPQ down to $10, Realty Income down to $15, and JEPP down to $5. JEPQ and JEPP are basically kind of the same. They're both covered call ETF. Now, I changed up my recurring investment into Realty Income because looking at things and analyzing things, I pay a lot in taxes, and pretty much SCHD and pretty much Realty Income, JEPQ, and JEPP, I believe they give an unqualified dividend, which means that they aren't tax advantaged. So pretty much when I get taxed on the dividends I get paid from JEPQ, Realty Income, and JEPP, they are taxed at my tax bracket, which is higher than long-term capital gains. So although we were buying into Realty Income, JEPP, and JEPQ for dividends, now we are going to be focusing more on VOO because this is focused on growth. It's the S&P 500 index, but they pay a much smaller dividend and most of the money is in the growth, so it's going to be tax advantage. Dividend paying stocks is more beneficial when you're in your elderly age or when you're in retirement, and we are far from that, so we shouldn't focus on that now. We should focus more on the growth side of things. Another interesting thing is I believe SCHD is going through a stock split soon in October. I've not researched it much. I've just seen a couple videos, and pretty much I believe the TLDR is they are doing a 3-to-1 stock split. So currently I have 7 shares, so times that by 3, I'll have 21 shares of SCHD. The share price is at $84, so cut that by 1/3, and the share price will be about $26, $27, $28 per share. Fundamentally, nothing really changes about the stock, but I mean, it looks better on the eye. Like, I would rather have 21 shares of something rather than 7 shares. It's just something about numbers. Like, if you look at your stock investment account, if the number is bigger, then you feel better about yourself, funny enough. So, as SCHD gets cut in 3, it's gonna look more appealing to buy. I mean, you're going to be buying what I already invest right here, SCHD $30 per week. So I'm gonna be buying one share of SCHD per week after the stock split, and that's gonna feel really good actually. We can go to this other website, and this is thedividendtracker.com. I literally opened this up today, and it's tracking my Robinhood portfolio. It's a dividend tracker, and this is pretty cool. We can see our overall dividend yield is 5.41%. Yield on cost, I don't exactly focus on October's income, so I made $12.56 from passive income in October already, and our annual income is $155.39. This website has a pretty cool GUI, I guess. You can see the companies, share price, the amount of shares, our P&L. You guys can look down here, and as you can see, VOO pays a really small dividend of 1.24% per year. So if you invested $100 into VOO, then you would be making 1.24% of $100. But also 1.24% is small, and that's pretty much better for my taxes when I gotta pay the taxes on the dividend. You can see JEPQ right now, it's currently at a 12.15% dividend yield. So let's use $1 million for example. If I invested $1 million into JEPQ, I would be making 12% a year on my money, as long as this doesn't change, because this will fluctuate. This isn't a hard number. So 12% of $1 million is $120,000 a year, as long as this yield stays the same. Versus if I had $1 million in VOO, then I would be making what, $12,000 a year. It's a 10 times difference. But overall, on average, we got a 5.41% dividend yield. So this means that if I had $1 million invested into this portfolio, we would be making approximately $54,000 a year. This would be cool looking at over time, because it's going to be nice seeing the income going up monthly and also our annual income going up monthly. But yeah, guys, that's pretty much it for this update. If you guys liked the video, please like, subscribe, and especially share the video with people who are in the younger demographic who aren't into finances or are trying to get into finances, because I feel like everyone should learn this stuff. I didn't really learn this stuff in school. They don't teach you this stuff in school for a reason. And that's pretty much because they don't want the average person smart with money. So hopefully you guys share this video so those people can see how me as a Gen Z 21-year-old kid, how I'm investing into the stock market and eventually the real estate market. Reishirou signing out.